Welcome back. As promised, let's focus on Quess Corp now. Q1 was a slow quarter for them, with the EBITDA and margins witnessing a hit due to wage inflation and seasonality. The domestic IT staffing gained momentum, but international IT markets remain muted. Guru Prasad Srinivasan, who's the executive director, and the group chief executive officer, Kamal Pal, is also with us. Kamal Pal Hoda, who's the Group Chief Financial Officer at Quess Corp. So we have two gentlemen joining in. Mr. Srinivasan and Mr. Hoda, thank you so much for joining in. Mr. Srinivasan, I want to start with you. If I go through the numbers, right, in what was a seasonally weak quarter for you, your annual contract value was very strong at 660 odd crores. Can you tell us what is the kind of visibility that you have for the rest of the year? Is it possible for your company to hit a double-digit revenue growth?
Sure, Sonia, thank you so much for having us on the show. First of all, I think we stepped in quite stronger than anticipated in our Q1 FY25. We have done a net add of about 30,000 plus headcount. If you look at, this is perhaps a combined number that we would have delivered in Q4 and Q3. It's a good start, the way we have got the head start into FY25. Our quarterly revenue is 5,000 crore. That's the second milestone. It's a good momentum for us to go forward from here. Yes, as you said, we have added about 160 plus logos, which is adding to about 660 crores by annual contract value. It emphasizes the kind of strong investment and the focus that we have got on sales, and it also set the context for the coming quarters as we move forward. Q1 is generally, there is a seasonal slowdown in two of our businesses. GTS, which is our global technology operations, normally will have a very high Q4. And Q1, the collection business specifically from BFSI tapers down a bit. So that's one impact. And it is also a high margin business. When it tapers down, there will be slight seasonal slowdown in Q1. Plus, in our integrated asset management business, we operate into a space where we work with universities and institutions in terms of food and beverage management. So that is again a high margin business which slows down. So these two are by plan. I think we are definitely on to the plan. And Q1 is slightly a seasonal decline, but otherwise we are all set for this year to steadfast in terms of our growth.
Okay, so you said you added a headcount of 30,000 and Q1 was stronger than anticipated. Just one follow-up question there. Your main business, Mr. Srinivasan, 70% of your revenue is workforce management. And the Q1 results have shown that Indian IT companies are now sort of clawing back to hiring. Hiring is picking up a tad bit. But your own presentation showed that domestic IT staffing has gained momentum. So just wanted to understand, in terms of workforce management, in terms of hiring, what is the outlook going forward? What kind of numbers are we looking at? And what kind of margins? Do you see a scope for margins to go up since IT hiring has picked up?
So that's right. So compared to Q4, our mandate by percentage is almost up by 36%. So, we were about 1,100 mandate in Q4, and I'm almost seeing about 1,500 mandates currently as we, moved on to Q1, which is very good recovery, I must say. And as we move forward, definitely, we are seeing green shoots coming in. As IT hiring picks up, the margin, there is definitely a scope for margin improvement because it comes at a higher margin, and we work on an average wage of about anywhere between 75 to 80,000. And these are largely, again, towards GCCs. Almost 78% of our hiring is for GCCs. So it will definitely help us in margin expansion as we move forward.
Okay. Gentlemen, morning. Prashant here. Mr. Hoda, let me come to you. So you left off FY24 with about 19,000 crores in revenues. What can we expect in terms of growth in FY25 for the full year this year? That is one. Will you grow that by at least 15%? And second, I think you had guided for some improvement in margins through the course of this year. So if you could quantify that as well.
Sure. Thanks, Prashant, and glad to be on the show. You're right. And as Guru explained, we started on a strong footing, and we started with 5,000 crores of revenue run rate for the quarter. So our internal estimates are we should definitely clock in a double-digit growth, and it should be definitely higher than in the range of 14 to 15%, like you said. As far as EBITDA margins is concerned, again, we are on plan as far as Q1 is concerned. Strong set of results despite the seasonality. And we feel that there is a possibility to at least do a 35 to 40 basis points higher margin as we progress through the years. Also on the growth, I think the budget has been very progressive. It has been around formal employment. It has been around skilling, and being one of the largest domestic players in manpower, we feel we can, participate in the progressive growth that this budget has outlined.
So margins could be around 4%, Mr. Hoda, for the full year?
Yes. As we progress through the year, we should definitely cross 4%.
Got it. So 14 to 15% revenue growth and about 40 basis point improvement in margins for FY25. Gentlemen, we'll leave it there. Short on time, Mr. Srinivasan, Mr. Hoda, appreciate your quick comments there. Very useful, appreciate it, and good luck. We'll speak again soon. So that's the management of Quess Corp coming through.